Hello everyone. Uh, just a second, we're gonna be starting.
Recording in progress.
Uh, I believe my voice and screen is clear, right? Please, the student taking the class live should confirm me. Yeah. So guys, we were on the attempt of, I believe, of the recent paper that was available to us, right? We are solving in a practice of some recent exams, and we have recent releases of December 24. Like this attempt is March 25 attempt going on, or June 25 attempt, and we have solved the most recent paper. See, ideally, if you want to pass the paper, you should be focusing on the recent taste, right? You should be focusing on the recent taste of examiner, right? What examiner is testing. One of our teachers says the past papers are like medicine. Huh? Since the medicines expire, so you have to move on to the new one. So past papers are kind of a medicine rather than going for too old past paper. Yeah, the old ones are good for practice, but in order to score some good marks, you have to do the recent exams, right? You have to do the recent exams, and therefore I've made this analysis for you guys, right? Like we are solving the recent ones that are available to us, and this is the analysis that I've made for you guys, that at least these questions should be solved by you, right? Like Fairties, Clonyard, Ron, Fiag, Jolt. I'll try to solve maximum by myself, but in order, if you realize that, oh, we have done KPI and balance scorecard, we should be doing this. Oh, we have done performance pyramid, we should be doing this question, right? So this is how you need to go on, okay? So in previous class, we did question one completely, right? In previous class, we did question. Yeah. So we were in a process of solving December 24, 25, the most recent attempt, right? And in fact, we have drafted this complete past paper, I believe. This was the answer, right? Here is the answer. I've uploaded to the LMS, and you have this PDF with you as well. So you have got that, right? So we did all these particularly question of 50 marks, right? Now we are on to question two. Now I'm not going to draft this question, right? Because I have drafted a lot of question, right? I'm not drafting it. I'm sharing two things of these questions with you guys, right? Two things of these questions. One is pointers, like which points can be written. One is that, and then one is your examiner answer, right? One is pointer, and so one is pointer, and one is basically examiner answer. Because believe me guys, reading examiner answer should be your habit, right? Reading examiner answer should be your habit. It should be your habit. If it's not your habit, so the problem would be that you won't be generating extra points. So therefore, what I believe is, at least there should be some questions that I'm reading the examiner answers in front of you, so you have exactly an idea that how examiner writes, right? And then you can draft your own answer and submit an assignment as well, right? Draft your own answer and submit an assignment. Yeah, couple of students asked that, sir, whether we should be doing the old question or the new question, right? I'll be recommending you that if you have the access to new questions, then you should be doing both. Else, do the new ones, because it reflects the taste of an examiner, right? Else, do the new ones. Huh? So the following exhibits available on the left hand side. So the screen would be like, here will be the written notes and here will be the exhibits, right? So this is kind of an extract that I've got from the examiner screen. Provide information relevant to the question. Company information, the background and operating environment of the company, Loshan. So they have given you a background of the company as well. Then divisional managers, bonus, details of proposed work on the problems and evaluating a divisional manager performance. So I believe that this topic would be from this. This is particularly an exhibit where the topic is divisional performance measurement, right? Ideally you should be knowing that if you have divisional performance measurement, you should be identifying the topics, right? You should be knowing that what are the topics and they should be identified, huh? Then transfer pricing policy, it's again, we had a detailed session on transfer pricing. So this policy, work required on criteria for designing transfer pricing policy. Then appendix 1, performance information from the manager of the division. So we have got some performance information, and this should be used to answer the question requirements within your chosen response options, right? So we have been given 4 exhibits, right? And each question vary now 25 marks, right? The previous question that we attempted was complete 50 marks and we drafted it. Then we have question 2, that's 25 marks. Huh? So we have got company information. What's that? Background, operating environment of the company. Then we have got divisional managers perform bonus, details of proposed work on the problems. And so manager might be encountering some problems and how you can evaluate the performance of them. Then we have transfer lesser drafting, right? They require a very lesser, sorry, calculations, not drafting, lesser calculations and not drafting. So practice, and for that you have to go on to the examiner answers reading. You have to draft your answers accordingly, and you have to get it marked by a special individual, those who you guys follow, right? I'm not asking to send me. The thing is that the ones those you follow, you should be getting your scripts checked by them. Okay, so now these are 4 exhibits we have been given. Then we move on to the requirement. We'll be reading the exhibits as well. Just a second, guys. So before reading the exhibits, we are going to read on the requirements, right? So 1st September 2005 it is, and respond to the CFO. So our audience is CFO, okay? Request for work on the following areas: divisional managers bonus, transfer pricing policy, 12 marks and 8 marks. See, I've attached my pointers as well. But the thing is, first we need to have an idea. We need to have an idea to read it at least, that what are written in the exhibits. Then we can construct our points and then we'll go on to the examiner answers. Okay. So now, exhibit 1, it's about company, I believe. I'll be saying that it's about company, right? Now, Lotion manufactures solar panel systems. I believe this is the in-demand business. Huh? You should be knowing a bit about business as well in order to draft well. Huh? So it's in-demand business. Huh? Then, which are used for generating electricity from sunlight. We know that. Lotion has two independent divisions, which are profit centers, So we have two divisions and they are profit center. J division operates in J land and produces solar panel systems for use in residential homes, right? So it produces solar panel systems, and this is mainly for residential homes. You guys are looking at residential businesses, right? It's not for the commercial one. They might have an extra potential and they might require extra resources. So we are catering to the residential homes. So our serving market is residential home, right? Now, T division operates in the neighboring country of T land and produces similar but much smaller systems. So we have a division in another country as well, right? So this is something important. Division in another country. You guys can use these notes as well. You guys can use these notes as well. So we have division in another country as well. For installation in mobile homes and small garden buildings. Now, each division currently only sells within its own country, and there are currently no transfer of goods or components between the two divisions. So currently, there is no transfer pricing being done, right? There's no transfers being done currently. Now, Lotion has an head office in Thailand, which provides IT, finance, treasury, HR, and other support services. Head office costs are allocated to each division according to divisional turnover. So it's a normal procedure of allocation, right? Because I worked in corporate, so I've applied these concepts as well. So it's basically that head office cost is being allocated on divisions, allocated on divisions, but on which cost? It's the turnover that each division generates, right? Turnover that each division generates. So they allocate on that. They allocate on that. Now, Lotion's IT systems are basic compared to similar sized business, and we have good IT systems and compared to the similar sized business, so it's fine. Now, the three main components. Now, this is about the product, right? This is something important, I believe. This is about the product. It includes batteries and all that. So they'll let you know about the product, because getting know-how of the industry would give you an enough idea to draft it accordingly, right? So knowing the industry is a main important thing. Now, the three main components of all solar panel systems are the solar panel themselves, an electric device known as an inverter. So inverter is there, solar panel systems are there, battery bank, and J division manufactures all three these main components. So we have two divisions, right? Which one were they? One was J division and one was T division. So J division, all three components are being produced by J division. Now, T division manufactures its own solar panels and battery banks, but purchases inverters from an unconnected third party. So while transfer pricing, there might be the case that they might be buying inverters from the J division. I hope you guys have understood this, right? So this seems to be an easy question, although it's from the recent attempt, but we are connecting with the question, and this is what our aim should be. So J division manufactures all three of these components for its products. T division manufactures its own solar panels and battery banks, but purchases inverters from an unconnected third-party supplier. Approximately 50% of direct cost of each solar panel system relates to the cost of the solar panel themselves, and 40% relates to the batteries. Now, what they are saying that we buy the inverters from third party, the T division, and 50% of direct cost of each solar panel relates to the solar panel themselves. So once we are selling a panel, it includes 50% of cost from them, and then 40% relates to each cost of the batteries, right? 40% relates to each cost of batteries. An inverter is an electrical device which connects the solar panel to the batteries. So this is how the psychology of the solar panel works, right? Now, Exhibit 2, 3, and 4. 4 seems to be a bit working, so let's read Exhibit 2 so we can draft something good. A new CFO has joined the Lotion head office team just over a year ago. One of our first tasks was to introduce a bonus scheme for the senior managers in both of the two divisions. So we hired a person, right? CFO, Chief Financial Officer, and his first task, her first task, so she's a lady, was to introduce a bonus scheme for senior managers in both of the two divisions. Each manager was offered a significant bonus in addition to their existing remuneration according to whether their division achieved the budgeted net profit. So, what we did, we said that if division achieved the net profit, right, what's going to be happening? If division achieved the net profit, what's going to be happening? Then you guys will be getting bonuses. So this seems to be a great one. If you're getting bonuses, so this seems to be a great one, right? Now, the new CFO introduced the bonus scheme as she thought it was a good way to motivate the managers to improve divisional performance. The CFO said this is because the bonus is based on the divisional net profit, as that is what the managers are accountable for, and it is under their control. And if you have taken the divisions class, there are certain issues which are uncontrollable, just like head office cost. Now, head office cost is uncontrollable for the divisional manager. So if that cost is getting allocated, there's a high chance that divisional cost or divisional net profit would get down and manager would not be getting the bonus. So think of the strategy that these guys are playing with you, the ACCAs are. That since net profit is under control of that manager, if that doesn't meet, so we're not going to be giving you the bonus. But the problem is that there are certain factors in those net profits that they are not accountable for. So how can you make them accountable for that thing in which there are certain components which they haven't got the control, right? So this is because the bonus is based on the divisional net profit, as that is what the managers are accountable for and it is under their control. The CFO said that as the most senior finance professional at Lotion, she would make the final decision on whether the managers should receive the bonus in any event of any disputes. So she has the power to do that, right? But there are certain important points accountable for. It is under their control, net profit, and she's going to be deciding the all things. So these are certain keywords, and I'm highlighting the keywords, right? Now, the divisional manager of T division has now complained to the CFO that bonus scheme is not fair and that he should receive the bonus for the year despite T division not achieving the budgeted net profit. Oh, so one manager came that you guys did the unfair thing, right? That you guys did the unfair thing. So the CFO is due to have a meeting with the manager of T division discussing the complaint about the bonus. The CFO has asked for your advice as the performance expert in preparation for the meeting. Using the information in one, the CFO wants you to advise her of the problems with the basis on which the manager performance is assessed. You should also advise, including relevant calculations, whether T division managers should achieve this bonus for the year. Oh, so you have to do the calculations as well. If you guys get the calculations, you seems to be the lucky one. The thing is, why you are going to get the lucky one? Because calculations are deemed to be an easy thing, and this would require certain adjustments, right? This wouldn't be doing that much technicality. This would require certain adjustments to be made. So CFO has asked for your advice as the performance expert in preparation for the meeting. You have to advise the CFO that whether they should be getting the bonus or not, right? Now, as a result of recent significant increase in the prices of inverters, now the prices gets increased. So T division thought of buying from the internal transfers rather than going for an external suppliers, right? T division purchases from the third party. It has been suggested that T division should instead purchase all of the inverters from J division, and J division have currently the spare capacity. That means they have capacity to satisfy the internal demand, right? Capacity to satisfy, because if Jay is selling outside and he's overloaded, so he won't be taking the responsibility of supplying the inverters internally, right? So capacity to satisfy the all demand. Okay, now A proposal for T division to purchase inverters from J division on temporary basis was tried several years ago. At that time, J division had spare capacity to manufacture inverters suitable for T division, which was experiencing supply problems due to flood at the factory of the supplier. However, the manager of two divisions were unable to agree the amount and price of inverters to be transferred despite conducting lengthy negotiations. This distracted the manager's attention from day-to-day. So in the past as well, they have tried to apply transfer pricing. In the past as well, they have tried to apply that, right? But this distracted the manager's attention from day to day, and they were in negotiations. They were kind of locking a price, right? Kind of locking prices. But since they were not able to do it, so they skipped it. So in the end, head office intervened by instructing managers to abandon the proposal, as overall it was unclear whether it was in the interest of Lucian as a whole and whether its impact could be reliably measured. Right. So the decision of head office was to be influenced to a small extent by a press story that a competitor was fined by the tax authorities in J-land for setting a low transfer price. And in the classes, I have also discussed that in transfer pricing there can be shifting of profits. So the company was aware of that, that somehow if we try to set a low transfer price so that profits can be shifted, so there can be the fines as well, right, by tax authorities. So a low transfer price to reduce a profit and which the tax rate is 25% and 20%. And this is the example taught in class, right? I won't be revising it. This is totally an example taught in class. Now, the CFO believes that before making a final decision on the suggestion that T division should purchase all of its investors from J division, Lucian should introduce a formal transfer pricing policy. She has asked you to advise on the criteria for that. So a theoretical requirement, I believe, that you have to, a theoretical requirement, I believe, that you have to set a transfer price. You have to set a transfer price, okay? So, now performance in information related to the payment of bonus. So actual net profit of T division 475, budgeted net profit was 500, so it's adverse. The actual net profit is calculated after charging head office cost of 220,000. Yes, you see, this was the problem. This is the problem. And this is the recent attempt, that the example that I've given you in the class, they have tested that. And the budgeted net profit of T division include a change of T 190,000 for allocated head office costs, right? So 190,000 as well. So the problem is that you get over allocation by 30K and your variance is adverse. So if we do a reverse working, we can say that if we didn't have got that 30,000 excess, we would have landed on the profit of 505, and the budget was 500. So in return, we got a 5 favorable. We were planning for this, but all of a sudden, head office charged us extra. So how can we think of that? How can we not get bonus because head office charged us extra? Now, key variances: gas used in the production in herring 97 adverse, cost of sales so 200. Now, commentary on key variances. Now, this is I believe is the corporate world, because these are the things that I have done for my entities, right? So this is what gives you an edge. If you have an experience, the papers like SPL and APM, they are quite good, right? They are quite good for you. Now, market price of gas increased significantly to an adverse variance of 55,000. Then the remaining adverse variance was due to excessive gas consumption by poorly maintained gas heaters. So there were two issues, right? The price and the consumption, right? So there were two issues: the price and the consumption. Now, cost of sales inverters. So a favorable variance of 46,000 is due to exchange rate movements of this. So we have got some favorable variances. Was ordered at a premium equivalent to 10 per unit from an alternative supplier, enough for ordered by production, because and then we had some issues as well while not maintaining the inventory, so we need to order extra. We have ordered some extras as well, and if you're ordering certain extras, so it must be expensive, right? So this was due to incorrect inventory levels showing on the division's inventory management system, because warehouse staff had incorrectly adjusted inventories following the inventory count. Right, guys? Now, an adverse variance caused by T division changing to a higher specification of inverter. This was required to comply with new regulations. So these regulations were not thought of in the budget, and then we have to do in the actual, which were costly, which had been announced on 31st December 2002, but only came into force in 31st October 2004. The cost of higher specification inverters, which were purchased from usual third-party suppliers, is 10% had a very unlucky environment against them, right? He had very unlucky environment against them. Now, why, sir? The thing is that the gas prices went up, the inverter prices went up. We need to change the supplier. The inventories were not kept that much, so we need to order something extra. So T division accepted the price to source the new specification. So they had a very unlucky environment with them, right? Now, two things: divisional managers bonus, that whether he should be getting it, and a formal policy. I believe this is an easy question, right? And if this, because last attempts, the December attempts APM's passing ratio was higher as well. So this seems to be the easy attempt, right? And the thing is that there are two common requirements from your syllabus. So let's discuss the pointers now, that what should have been made, right? Let's discuss the pointers now, what should have been made, and then let's have a discussion on examiner answer, that what done. Okay, so what and how examiner has written. If there are any questions till now, guys, please do let me know, else we can move on to the answer. Let me check the checkbox as well. Yeah, guys. So we were discussing these two requirements. One is divisional manager bonus, and other is transfer pricing policy, right? So see, these are the pointers that I have made, right? It's kind of planning your answer, right? How you gonna be writing, right? And once you have planned the answer, then comes the drafting, right? So I'll be sharing the planner for question 2 and question 3, and then we'll be reading the examiner answer as well, right? Reading examiner answer as well. And what you have to do, you have to just draft it on your own, right? So see, divisional managers bonus, right? So overall problems with the basis used for performance assessment, right? The problem, what arises, the para that we should be starting is the para that we should be starting is that overall the basis used for the performance assessment is vague, right? Is uncontrollable by the manager, and then we'll discuss it in detail, right? So at least this pointer should have 3 lines, right? You should be explaining that the manager seems to be right, as the basis used for the performance assessment doesn't suffice the requirement, or can discourage the manager. So these kind of words, and we'll see the examiner answer as well, that what they have written, right? Now, managers should only be accountable for aspects within their control. Another good point, like this should be a para as well, like the things that which are in control shall be accountable, right? Things that which are in control of manager should be there, right? In control of manager should be there, right? Now, uncontrollable factors may demotivate manager due to unfair bonus criteria. Yes, of course, this is surely gonna be demotivating manager. This is another a good point. Bonus based on divisional net profit doesn't distinguish between controllable and uncontrollable factors. Now, here comes the reflection from topic. Here comes the reflection from topic, that there should be controllable and then there should be uncontrollable factors. Okay, performance data doesn't clarify controllability of variances, right? You have mentioned, now what you're gonna be writing, that you have mentioned variances, right? You have mentioned variances, but are they controllable? Who's gonna mention this? Are they controllable? Who's gonna mention this? Huh? Decisions influenced by external events or head office reduce fairness, right? Yeah. So what happening is here, that cost of head office has increased and it has been allocated to us, and that was higher than budget. So ultimately my division's net down. I can control the head office cost. You could have asked them that why they are increasing, huh? So if head office is driving the profits, then there's a problem, right? If head office is driving the profits, then there's a problem. So this seems to be a good starter. Then there is an advice of bonus award. So adjust net profit for uncontrollable cost, right? Head office cost 220,000 should be added back. The amount that it exceeds, it should be added back, right? Gas cost increases is uncontrollable. Now, why is that? Why is that gas cost? Because the prices are not in control of manager, right? The prices are not in control of manager. See, variable rate tariffs negotiated by head office. So how can manager be asked on this performance? Yeah, if the consumption goes higher, so the manager is responsible, but the consumption still is by poorly maintained gas heaters. So how can the manager can be responsible? How can the manager be responsible? Right? Then exchange rate variances should be added back, because no responsibility of manager. No responsibility of manager here. Extra cost for new units is controllable and should be added back. Yeah, this cost is controllable by manager, so should be added back. High spec inventory variance already budgeted, so no adjustment. Yeah, if something is budgeted and it's same, if something is budgeted, so it doesn't need to be added back. Now see how easy this question was, right? Doesn't need to be added back, right? So conclusion, it would be 704,000 and it's 690,000. So it's positive variance and manager should receive bonus, right? Sir, you have given us the pointers, right? Sir, you have given us the pointers. Where are detailed answers? Guys, for detailed answer, I'll refer you, although I've drafted many APM questions and these are available on the LMS, but yes, for detailed answer for this question, I would recommend you to at least read examiner answer. Now let's go on reading examiner answer. So yeah, see. Now these are pretty much lengthy paras, right? Pretty much lengthy paras. And you are not supposed to draft like that, but at least a start, a end, a way of talking should be like examiner, right? Not supposed to draft like this, right? Now see what they have seen. The manager should only be held accountable for the aspects of divisional performance which are within his control, a basic English. Not doing this would be unfair to him and may lead him become demotivated and improve divisional performance. And if he is demotivated, he won't be improved. Now, this is a good point. Huh? The good points that I'm getting to start, I'm highlighting it. Okay. Now, this is because he may be prevented from receiving his bonus due to non-controllable factor. Now, why this is important that he should be managing only the controllable performance? The thing is that if non-controllable factors came and he didn't get the bonus, so he'd be demotivated, right? The performance information relating to bonus of manager of T division does not distinguish between aspects of divisional performance which are within the manager controls. The criteria that you have set should be distinguishing, right? It isn't distinguishing here. So criteria should be distinguishing, right? That on which you are going to evaluate the performance. Believe me, guys, I work and I am working currently now, and I see that managers are only evaluated once the factors they are in their control. They are only evaluated on that, right? They are only evaluated on that. Yeah. Now, basing the manager's bonus on divisional net profit provided in appendix for some factors outside his control. This is because the performance information does not eliminate or adjust these factors when deciding whether he should receive a bonus. And ideally, this should be the SOP for every manager, that you should be eliminating the factors, right? This should be the SOP for every manager. Now, though the information includes a brief commentary on some of the key variances, it does not explicitly show which of these are controllable. Yes, if examiner in the question has done something good, you have to write that, yeah, you have mentioned all the factors and all the variances, but still you are failing to mention of the factors were in his control. And obviously, bonus should only be on the controllable factors. Now, it may also be difficult to determine exactly which factors are fully within the manager's control. This could be because the manager's decision may be influenced by other decisions of head office, or because of external events or market factors which affect cost, revenue, but are not result of manager decisions alone. Now see, determining exactly which factors are controlled is a subjective thing, right? It's not that much easy, although we are writing, oh, yes, you should be doing it, but it's not that much easier. This could be because the manager's decision may be influenced by other decisions, such as those of head office, because of external events or market factors and affect cost and revenue, but are not as a result of manager's decisions alone. Now, the performance shows 25,000 adverse variance overall, which means the manager would not receive bonus, right? So overall conclusion is that he won't be getting bonus. Guys, these are the detailed answers. You are not supposed to write like this, but at least you should be conveying your message like this, right? You should be starting, you should be ending. The points that I mentioned, it's just from the extracts of this, right? Based on the profit attributable to division, in order to advise on whether the divisional manager should receive a bonus, to performance information needs to be adjusted, which are outside manager control. Now do the adjustments, guys. Do the adjustments. Now here are some detailed adjustments. Here are some detailed adjustments. Now then compare to similarly adjusted to see whether the target has been achieved or not. So we will be adjusting our actual profit. So adjusted actual profit adjusted budget profit, and all the uncontrollable things should be eliminated. All the uncontrollable things should be eliminated, and then we'll decide what to do, right? The cost and variances on performance information will be evaluated below to determine whether they are controllable by the divisional manager and therefore whether they should be included when assessing the performance. Now, head office costs are. Though head office costs are attributable to the division and should therefore be considered when assessing divisional performance, they need to be excluded when assessing the performance of divisional manager. So what this theory is saying that unlikely just eliminating the 30,000 from here, they're saying that you should be eliminating complete head office cost from this and this so that the comparison could be like with like, because head office is something, I think, that isn't in control of manager. So it's right. Either delete 30,000 or delete the complete, it's totally fine. Now, should be considered when assessing divisional performance. They need to be excluded when assessing the performance of divisional manager. The manager does not control either the level of these costs on the basis which they are allocated, and so should be added back, right? Should be added back. Budgeted net for 190,000 allocated to D division. Now, this is the budgets, right? So this amount also needs to be added back to the budgeted net profit. So we are not just impacting the actual profits, we are impacting the budgeted profits so that there can be a consistency in both comparison, and the budgeted net profit to which the actual net profit should be compared is 690,000. Okay, so 500 and 190 cost that was there, so it added. Now see, adjusted budgeted net profit is this, and we added this amount because we need to decide that whether this needs to be, bonus needs to be given or not, right? Now, gas cost. The significant increase in market price led to an adverse variance. The divisional manager could not control this adverse variance as he has to accept the market price, and the variable rate tariffs was negotiated by head office, not by him. One more thing that I've written in the question, that leader here was, the decider here was head office, not the manager. So therefore, we need to exclude this variance. The manager would, however, have ultimate control of maintenance of gas heaters, which accounted for an adverse variance, and it is to take account extra cost when assessing the manager performance. However, the 55,000 on gas relating to gas price increase should be added back to net profit. So we are saying here that gas price variance should be added back because it was deducted. It was deducted from the profits and was uncontrollable. But the heater's cost is controllable, right? Heater's cost is controllable. Okay, now cost of sales. The 46,000 due to exchange rate movement is again outside manager control. It's not us, it's the treasury ones, those who want to be deciding, hedging, investing, and all that. So should be deducted from here. So it was added in the profit. We deducted it, right? It was added in the profits. So we deducted it. Okay. Now, the adverse variance due to inverters being purchased premium onto an alternative appears to be under control of divisional manager, although incorrect was showing on the division's inventory management system and IT services provided by head office. The source of error was due to warehouse staff incorrectly adjusting inventories following the inventory count. No adjustment should be made in respect of this item, right? So adverse variance of 50,000, again, not in my, it was in my control, right? Because why? It's totally that I have to decide the supplier. I should have gone for other suppliers as well, right? But the inventory missing and the inventory gets shortage, right? Now that also is of the warehousing staff, right? And it comes under the manager. So therefore, no adjustment to divisional net profit should be in respect of this item. Now, sir, if I have adjusted this number, so how much would I get? You would have got 0 for this adjustment, right? You would have just got 0 for only this adjustment and nothing more. Okay. Now, the presentation of performance information of 196 adverse variance due to increase in specific inverters may suggest that this is uncontrollable of divisional senior manager because it was required to comply with new environmental regulation. However, though new regulations came into force from October 2004, they were announced to 2 years earlier. Now, that's the problem. If the regulations have been announced earlier, why we were not prepared? Now, that's the problem. That's the issue from our end. Assuming there was working from Lucian at that time, if that manager assumes to be working at that time, he should have been able to look for a cheaper supplier come into force. Now, this is a judgment which APM requires, right? Now, this is a judgment which APM requires, right? Also, T division accepted the price increase without attempting to source for cheaper suppliers, and you easily got into the pricing increases. Now, these are 3 good paras for student, right? 3 good paras. Now, which paras, sir? First, I would write as a student that these regulations should have been known earlier, right? Since I was there at that time, so I should have looked for the alternative suppliers. And we accepted the price increase without sourcing for cheaper suppliers. These 3 good points suggest us that we do not need to adjust that, right? Therefore, no adjustments to the profits in this item. Guys, these are easy questions, easy peasy questions, right? Now, all the adjustments done. So net profit is this, 690 was this. So divisional manager has a financial incentive to argue that bonus scheme is unfair in order to receive, which could be significant. It would appear that manager complaints are justified. Yes, he's fighting for his right. He should have got the bonus because all the other factors have suggested that. If the performance information is adjusted to focus on controllable profits, then the adjusted actual net profit is greater than adjusted budgeted net profit, meaning manager should receive his bonus. Now, guys, ask from your heart. Please ask from your heart whether this question seems to be a difficult one. I believe the first question was a difficult one, right? I really believe that. But I don't think so that this question seems to be the difficult one. Now, draft your answer of this part and send it to my number so that I can check. Draft your answer. What's my number? It's +92 331 2623 849. Always available on WhatsApp. So draft this and send it to me for checking so that I can idealize that what pointers that I make, what examiner is writing, and you should be in between of them. All the points needs to be covered. Structure should be from an examiner, and this is how things to be done, right? Oh, sorry. Now, what was the next question, guys? Transfer pricing policy. Now, this seems to be a theoretical one. Why? Because we are going to setting up a transfer price. Why? Because we are going to setting up a transfer price. Yeah, guys. So in order to set transfer pricing, it's a theoretical argument, right? It's a theoretical argument, a definition-based approach here, right? It's a theoretical argument, and I must say it's a definition-based approach, okay? And what's that? What should be the purpose of transfer pricing? Although these are the pointers, the detailed notes to be made by you, right? The pointers are that it encourages divisional autonomy while aligning with organizational goals, right? So it encourages divisional autonomy. Then managers rewarded for decisions under their control. This is part of the transfer pricing that you have to sit back and answer. Then head office should not override the divisional autonomy unnecessarily. Now, guys, this is subjective. Like where head office thinks, oh, my divisions are not doing right thing. Where head office thinks, oh, my divisions are not doing right thing. So what they'll do, they will unnecessarily didn't allow them to do that. Then head office will intervene, right? Then transfer prices must appear fair and avoid disputes. It should not be benefiting one, right? It should not be benefiting one. Okay. Then costs like exchange rates must be handled consistently in pricing policy. Okay. So cost exchange rates should be handled consistently. Then goal congruence, align divisional and organizational goals. Sometimes division thinks these are our goals and organization's goals are there. So ideally, division has to follow the organizational goals, right? Similarly, if you are working different countries, so one division would think of excelling in that country and division would think of excelling in the old existence country. But ideally, it's the organization who's going to be determining where to excel, right? Now, let's lead the examiner answer here, like what examiner has written. Let's have a discussion there. So now it's again a detailed argument, but since it's of 8 marks, so 8 valid points would be good, right? 8 valid points enough. Now, a transfer pricing policy should encourage divisional autonomy while facilitating divisional performance measurement and encouraging goal congruence. So a good definition, right, between the interest of individual divisions and interest of relation as a whole, it should aim to achieve the following. So ultimately, a good definition to start with, right? A good definition to start with. Okay? It's a good definition to start. Now, then, divisional autonomy. A transfer pricing policy should promote autonomy of 2 divisions rather than giving benefit to the one division. It should promote autonomy, right? Now, this to ensure that the divisional managers are motivated to improve their own divisional performance, right? Divisional managers are motivated to improve their own divisional performances. They will get rewarded for the work which they do and the decisions they make. So they should be knowing that if we are doing something, we're going to be getting bonuses. If we are doing something wrong, we're going to be punished, right? The price which is said to be now connecting with the scenario. In theoretical arguments, what students do, they stop connecting with the scenario. So connecting with scenario, that the scenario that was given to you, the inverters and all that needs to be done. Although examiner has written a lot of points, you do not have to write like that, but at least some of the main points needs to be discussed, right? Just like the price which is set for inverters to be transferred between divisions will affect the revenue of J division and the cost of T division, and hence the profit of both divisions which operate as profit centers. So yeah, the price is going to impact them. Because of this, the division will tend to be act in self-interested way. Yeah, here comes the main argument that since you are going to set the price, this is going to impact my division's profitability. So I am going to be a self-interested one, right? Because the divisional managers can be awarded a bonus which is currently based on their divisions achieving the budgeted net profit. So that means manager would be acting in a self-interested way. They would decide anything to save their division's profit rather than thinking for a company as a whole. Now, a transfer pricing policy must strike balance between promoting divisional autonomy, must strike a balance between promoting divisional autonomy to set transfer prices and quantities and the need of prevented divisions acting in completely self-interested way. Head office should retain some authority, right? If it's going to decide on their own, so head office should have the authority to override their controls as well, right? The CFO has make any final decisions if there's a dispute over bonus payments. So that means she has the authority, right? And Lotion's head office already did when there was a temporary transfer arrangement several years ago. This was because divisional managers were distracted from the day-to-day. So that means these transfer pricing negotiations should not be impacting your day-to-day operations. If you are getting impact on the day-to-day, so definitely, all right, we are going to decide should be working thereon. I would be saying that this paragraph, and this paragraph should be written in the divisional autonomy, although in your own words, but there are some good points. Divisional autonomy is important to maintain the motivation of divisional managers. Therefore, by intervening in setting transfer prices is reducing divisional autonomy, and this would lead to demotivated. So most of the times, entity has to think that whether we should intervene or not. If we are intervening, so that means there's a high chance that manager would get demotivated. So make sure that only at that time when they are pursuing their interest, head office intervenes and decides what's best for the company. Yeah. So now divisional performance measurement, the transfer pricing policy. If you're making a policy, so what it should done, it should must make divisions to see this an amount. Now here the policy should be fair for everyone, right? The prices should be commercial prices rather than the profit shifting prices, right? The prices should be commercial prices. It shouldn't be the profit shifting prices, okay? Otherwise, the division may disagree about these, even to the extent that this extracts the divisional manager's attention from other issues in the business, as happened with temporary transfer pricing arrangement several years ago. So what will happen if you just keep up the unfair prices? So the both managers will fight. Rather than focusing on the operational rules, they'll fight. And if they're fighting, so it wouldn't lead to any particular judgment, right? This wouldn't be leading there to the particular judgment. Now, the divisional managers are likely to view a transfer price as unfair if it would result in lower profits than they could achieve by transacting with external customers. Now, this is the basic thing. Like if we are getting a higher price internally, so we'll get lower profits if we are dealing with the division. And if we are getting a cheaper price outside, so we should be buying that. So they should have the divisional autonomy, right? Also, the manager of T division would think it is unfair if the transfer price were to cover the J's division's fixed overheads. Yeah, obviously. Because if I'm buying from any division and they're charging me a price after incorporating the fixed division, and you are not supposed to write the examples in the answer, but this is for your understanding. If I'm paying for your fixed overheads as well, why would I be motivated, right? This is because J division has spare production capacity and its fixed production overhead by definition would remain unchanged, right? Yes, now this is a key point. They have written that if someone has spare capacity, so that means they won't be charging me the fixed overheads. Yeah, if they don't have capacity and they are going to rent another warehouse for my products, so they should be charging me the rent here. I hope you guys got it, huh? I hope you got it. If someone is renting a warehouse to meet my demand, so I'll be paying the rent. But if he has a spare capacity, he knows that there's no fixed overheads to these products, so he shouldn't be charging me those products, right? A transfer pricing policy may need to explicit about which of the J's division cost to transfer price should cover, the prevent disagreements between the divisions about this. This prevents the disagreement of the divisions about this. Okay, now the transfer pricing policy relating to T division and J division should be clear in how it deals with exchange rate movements when measuring divisional performance, because you guys are settled internationally. So this should be a good point to discuss. This is a relevant point for the scenario because you are settled internationally, right? This is because the two divisions operate in two different countries in different currency. So this is the particular important thing of the exchange rate between and has been volatile and changed significantly over several years. So this means that transfer price could fluctuate widely and will have a significant impact on the revenue. So this could have a significant impact on the revenue which J division receives for its inverters and cost of for T. So that exchange rate catered in transfer price should be good. The cost of inverters, however, represents only 10% of the direct cost of each solar panel system. So the impact of these rate movements on the overall results is likely to be relatively small. So yeah, these exchange rate movements impacting that. These exchange rate movements wouldn't be impacting that much. So, but still, they need to be catered in transfer price. Yeah, now goal congruence. Huh? So transfer pricing policy should ensure their goals are congruent as well, right? Now, these are separate headings, and I believe every heading should have two or three points, and that's enough, right? And what I used to do in my times while studying these papers, I used to make short answers from the examiner answers so that I can keep in mind that how the things work, right? And therefore, I got some good marks in the theory. The thing is that I follow the trend that follows the examiner, right? Division with that of Lucian as a whole, the policy should ensure that decision which maximize divisional profit also happen to maximize group profit. The aim should be maximizing divisions and the group's profit rather than maximizing only divisions and impacting the other division, right? So on a group, and I have explained this is very clearly in the divisional performance class or in the transfer pricing class. The policy should do this by encouraging to agree on a transfer price in quantities which maximizes Lucian's overall profit and Lucian's overall objective. Now, this did not appear to happen when there is a proposal for a temporary transfer pricing several years ago. Now, see, they have referred it quite, I believe they referred it quite 4 to 5 times the previous year. So this is how you link your answers. So at that time, head office intervened and abandoned this proposal. This was because it was unclear whether the arrangement was in interest of Lucian as a whole, because it did not maximize corporate profit. Also, the impact of that proposal could not reliably be measured or administrated because Lucian has relatively basic IT system, right? Now, that was the one, because we didn't have that much system, so we couldn't focus that much on, right? Now, the decision by head office to abandon the previous proposal was influenced by a press story that competitor was fined as well. And why head office intervened? Think of that, because they know, oh, one of the entity was shifting the profits through transfer pricing and the tax regime made them a penalty. So why we should be doing the transfer pricing? Because if we are doing it in a legal way, there could be investigations. But here, the point of view should be that if you are doing it in a legal manner, if there is an investigation, then there's no problem, right? Now, the transfer pricing policy should ensure that there's a transfer price which complies with tax regulation. Yeah, one more thing in goal congruence, the tax breaches shouldn't be there. They should be complying with tax regulations in T-land and J-land. And so to avoid incurring fine as a competitor did within these constraints and provided it's legal and ethical to do so, Lucian could maximize corporate profit by setting a transfer price which would lead to more profits taxed at a lower rate of 20% to T-land at 25%. So in practice, it will be hard. So in theory, it's easy, but in practice now, see the concluding comments. I really like this, that in practice, it will be hard for Lucian's transfer pricing policy to satisfy all three aims because they may conflict. In particular, we need to ensure corporate profit maximization and still retain. Now, these two things are the two phases, but you have to focus that you should be focusing on corporate profit maximizing and still focusing on that. You have to give divisions the autonomy as well. So similarly, setting a fair transfer price by taking exchange rate movements into account will make it harder and measure divisional performance. The fact that the inverter comprises approximately 10% of direct costs should be considered when negotiating a transfer price, and when designing a transfer pricing policy. Overall impact should be relatively small but it should be focused within detail. So I believe while reading the examiner answers, you have much more better picture that how exactly examiner writes, right? So guys, in today's class, we did this question of 20 marks, and yes, we are focused on analysis. What's analysis are? Referring with the different exhibits. We have done that. Evaluation, pros and cons. So we have done that. The pros of basically your transfer pricing and the divisional manager bonus, and the cons of transfer pricing and divisional manager bonus, and skepticism as well while evaluating the last 7 years impacts and all that. And yes, you need to be commercially sound as well. So we had all the arguments which satisfies these divisions, these particularly skills, right? So hopefully I believe that you have got an idea. We'll be doing more practice. The questions that I've showed, I am aiming to solve it completely with you guys and discuss it with completely with you guys so that you can move on, right? So this is all from my side, guys. Take care. See you all in the upcoming session.